With geopolitical tensions running high and uncertainty in the air, most traders were on edge heading into this week. But inside TTC, we were calm, prepared, and watching price unfold exactly how we expected. From the early drop to the clean rise, let me show you how the TBD system guided us through another powerful week. This week wasn't our usual sideways weekend trap. Instead, we had a trend straight out the gate, and we were ready. From an early Sunday video update, to Discord calls across multiple assets, to the macro breakdown from Jared and Pedro, I'm going to walk you through exactly how this week played out inside TTC. I'll break it down day by day, show you how we traded it using the TBD system, share how the community have traded this week, and give you a taste of what it's like to have real-time support whilst you trade. Hi, my name is Janet and this is Trade Travel Chill. If you're new here, welcome. If you're returning, welcome back. Be sure to hit the like and subscribe button so you can be notified each time I upload a new video. Let's get into it. Over the weekend that has just been, we didn't get our typical weekend trap, and instead, price trended down right from the start of the US session on Friday, which I mentioned in last week's video due to the massive options expiry, through to Sunday. Now, when Friday's US session closes with a big move like we saw here, it's not unusual that we see that momentum bleed into the weekend. And that's because of crypto's 24/7 nature. With traditional markets shut, crypto becomes the only place traders can offload risk, and in the heightened uncertainty around Iran and Israel, it's easy to understand why some investors may have panicked in anticipation of further bad news. Then came confirmation. Trump launched an airstrike on Iran, and the fear in the market was real.
That the United States has bombed 3 nuclear sites in Iran. CBS is reporting 6 B-2 stealth fighters dropped 30,000-pound bunker buster bombs on at least one of those sites.
The U.S. military carried out massive precision strikes on the 3 key nuclear facilities in the Iranian regime.
Now, before the news around the airstrike had even happened, Annii gave the community an early video update before her public YouTube video dropped. She broke down what to look for and gave the warning before the volatility hit. And not once did she mention any news, pure price action based on the model we trade. But here's the thing. How could we have known this move was coming? And not just the drop, but the clean 3-day swing that followed it. And it's simply because... Hang on, that's my mum. Hello? It's because we don't trade off headline. We don't wait for confirmation from the news, because by the time it drops, it's already too late. Like, come on. It's not like you're sitting there refreshing Trump or Elon's Twitter every 3 seconds, just waiting for a tweet so you can enter a trade, or watching CNN hoping you'll hear something fast enough to click buy. Right? I hope not. In TTC, we put the model first. The news is just the excuse. It's the storyline that follows the price, not the thing that creates the setup. When you understand structure, the charts tell the story before the headlines even hit. So let me go back over the weekend and show you how you could have anticipated this reversal that led us into the 3-day swing. During all of last week's price action, we were still waiting for a drop level 3 to happen on the weekly setup 1 hour time frame. It was a little tricky, especially with this move up that happened around the crypto options expiry that took us to the max pain price of 106,000 into the major markets options expiry around the start of the US session. Once we seen the puts get squeezed out in crypto and major market, we seen volatility, which gave us the drops, which then gave us our drop level 3 in the model that we trade. So we were expecting downside. Now over the weekend, we didn't get our typical weekend trap, which I also mentioned earlier. So were there signs during the weekend that gave us the heads up to look for reversal patterns for a 3-day swing? And yes, there was. 1, we were looking for drop level 3 and we finally got it. 2, price trending over the weekend isn't normal, and quite often when that happens, we can see Monday's price action reverse that trend. And open interest, I've marked out the beginning and end of the weekend so that we can clearly see the price action that has happened. But when US session made the major move on Friday, we see price go into consolidation, and if we look at the open interest, it's basically flat. When price made this move down here, we can see that it caused liquidations or forced traders to close their position, hence the open interest dropping. Throughout this small amount of price action, we see open interest start to increase, and because price is moving to the upside, I'm going to assume that those are long. So at this point, I know that not many traders are opening short positions. Why? Because when we have the drop on Friday, we can see that it has caused liquidation. When we had this drop over the weekend, also caused liquidations and positions are being closed. And then as soon as we have the tiniest of moves to the upside, people are opening long positions. So no one is believing that this drop is real, and they're more so seeing it as a long the dip moment. From there, we got the news around the airstrike, which sent that open interest screaming to the upside. So people are now believing that the drop is finally real, and they're opening short positions at the worst possible time. What do I mean by worst possible time? It is simply drop level 3. So we know that we start to pay attention around market open Sunday 5 p.m. New York for signs that false move week beginning may have happened early or is still incoming. So from there, we did end up getting our reversal pattern right around Sunday 5 p.m. New York, which is the shaded background here, bullish Morningstar pattern. Price then failed to recover any of this vector candle. Once the reversal pattern locked in, price kicked off into our rise level 1. One of the most teachable moments from Monday came from Cajun Spice in Discord. He called a short scalp, then flipped it long, Colombian bag flip style, to then catch rise level 2 for the 1 hour time frame. So if we look at his update, he said what to look for day trade wise. 1. A bearish rejection of the 200 EMA for a short scalp into the second side of a higher time frame W. And if I look at his chart, he has drawn what he was looking for here. So let's just go through and have a quick look at how that played out. This is Monday's price action, and this is where he posted that chart update. He was looking for a move up into the 102,000 region to then take a short scalp down into this area of interest. Actually, if I read this correctly, he's got the level marked out to a T, 102,441. So let me label that on the chart. Mate, nailed it. So we got the move up into his 102,441 area. More than likely he was watching the 5-minute time frame as it was intended as a scalp. He got his bearish reversal off the liquidity, stop loss above the bearish candlestick pattern, bang, take profit hit right off 50% of this area of interest. From there, he then mentioned a second side of a 1 hour time frame W, presenting likely as a 5 or 15 minute time frame W into the US session today, or even going in tomorrow. Well, it happened during the US session. There was not a clear W formation. However, there was clear bullish candlestick patterns here. And if you are trading W formation and you are anticipating that this is the second side of the W, then you're entering off the bullish candlestick pattern that presents on the second side of the W, and your stop loss goes below the first peak of the W formation. Nice work, Spicy. But here's the lesson. That short was a counter trend trade scalp. And if you don't know where you are in the model, or your trading hasn't been solid lately, that's a trade you would sit out, and instead you would wait for the long position that aligns with the model, because that's where the high probability moves live. Around the same time as Cajun Spice running his live session, and then following that up with a written chart update, we have Silverwolf drop a powerful blog around the war, oil and Bitcoin. He broke down how Iran's move to block the Strait of Hormuz, which channels over 20% of the world's oil, could ripple through the market. Oil and gold spiked and Bitcoin initially dumped, but Silverwolf reminded us that Bitcoin plays the long game. It's not just digital gold in name, it's where smart money can flow after fiat confidence takes a hit. The takeaway? Bitcoin may dip first, but it often recovers quicker once the dust settles. So with rise level 2 clean in the books, we move into Tuesday's price action. Tuesday gave us a textbook boardroom, tight range consolidation, indecision. That's where we zoom into my favorite indicator, it sounds, open interest and volume. This helps us to anticipate what is going to happen out of the boardroom. Do we expect a stop hunt or a clean breakout? And the read was a breakout incoming, stop hunt not necessary. Let me walk you through that. Now, this conversation that I was having with a member in Discord isn't exactly talking about BTC. However, what I have wrote here applies to BTC because the same thing was happening there. And in this conversation, we were talking about this move to the upside on Ethereum that had spiked out, but then quickly reversed down. Now, initially, when we're looking at moves like this, we think that's the fast move that caused the stop hunt. Maybe we get a reversal from here. However, I added here that they may just be testing the highs as well. When I look at open interest, it is rising whilst we're in this boardroom. If this is so, then we wouldn't need a stop hunt low before continuation, meaning look for the W within the boardroom before continuation to the upside. And this is that chart here. So now let's bring it back to BTC. Tuesday, we see prices in a board meeting, consolidation. Open interest is increasing whilst we're in that boardroom, meaning a stop hunt is not necessary. Breakout incoming, so look for the W within the boardroom. So there were many higher lows here that you could have picked, anticipating the breakout to the upside. This one here is the better entry. Why do I say that? Because it was a multi-session W formation from UK into US session, which then gave you the entry. This is confluence in action. EMAs, open interest, volume and market structure. Now, whilst price action has been clean, everything outside the charts has been anything but. And just to show you how real all of this gets, we had Pedro giving us constant updates by the minute on what was happening around Doha and the UAE airspace. He mentioned it's already known what's going to happen, now we just have to wait. Breaking: Qatar airspace is closed, flights bound for Doha airport are diverting to nearby airport. Now that might just sound like news to some people, but not to us. Annii lives in Dubai and one of our cabin crew ProTraders is based in Doha. These aren't just charts, they're people we care about, so beyond the price action, we're hoping everyone stays safe. And now we move into Wednesday's price action. No, you know what? We don't always get everything right. Let me show you. On Tuesday, one of our traders put out a trade alert on Solana, looking for a long position before taking profit at the liquidity you can see on his chart. And you can see here that he did enter the trade with half a position. And that was on Tuesday. Then moving into Wednesday for Solana, I also was looking for a long position that I alerted the community about. I said, if the gap or Asia can repeat the dead gap zone initial low of the day and hold, then that would trigger an entry for me in anticipation of the next 1 hour rise. And if we look at that chart, this is what I was looking for. Following on from that update, 3 minutes later, I said, I like the vector on the 15-minute time frame, just not for an entry, so drop down to the 5-minute, look for wicks to recover the vector and give bullish candles on the 5-minute, then good. Now, at the time, I was out, hence why I had put out a phone chart. So let's go and have a look how this presented. Now, at the time, this was the dead gap zone initial low of the day. This is the vector candle that I was referring to that I didn't like for the entry, and I mentioned to drop down to the 5-minute time frame. You can see that price did come down to recover all of this vector candle around the start of the Asia session. We held the EMA and then we got bullish candlestick patterns from there. I then alerted the community that I was in. Now, I was targeting this liquidity here where the bright yellow is. So let's just play this one forward and see how it played out. Great, we have a break above the consolidation range with volume. We got another spike up and created another higher high. So bullish market structure was clearly intact, creating higher highs, higher lows, higher highs. And now it is the start of the US session. During this time is when I go to bed. So the best I can do is adjust my stop loss and then wake up the next day to see whether my trade survived and hit my take profit or whether I got taken out. And in this case, I had moved my stop loss up under this higher low, and during the US session, they came back and took me out. So whilst most of the time we get it right, there are times like this where we're just wrong. So now we move into Wednesday. Wednesday was a slow but clean grind higher, giving us a rise level 3 on the 1 hour time frame. If you're new here, this is the model we trade, and this is what we would expect over a typical week. Over the weekend, we look for sideways consolidation. Come Sunday 5 p.m. New York is when the market opens, and this is when we're looking for signs of false move week beginning. Now, false move week beginning doesn't always present the same way, hence why you should consider grabbing yourself a membership so you can learn the many ways it presents. So from the weekend trap around Sunday 5 p.m. New York, we're looking for signs of a reversal pattern. In this case, we have a W formation. We then look for price to trend over 3 days or 3 levels of rises. In between each of those rise levels, price can either retrace or go into consolidation before the next rise level. Once we have our 3-day trend in, or 3 levels of rises, we look for the reversal pattern, ideally lining up with a news event. Once we get it, drop level 1 should follow, then into a boardroom or another retrace, drop level 2 and drop level 3, leading us into trap move Friday and then back into the weekend trap. If you need an exchange to trade on, consider checking out Bitunix. It is no KYC, no VPN, so you'll be able to get access to this one worldwide. They offer futures and spot trading, and they've recently introduced an earn program which allows you to stake your crypto to earn more crypto. By using the link in the description below, you'll get yourself a 20% rebate on all of your trades for life, so you can keep more of the profit. To take advantage of this 20% rebate, create your own account by using the link in the description below. So when we look at this week's price action, we have our reversal pattern. We have a clear rise level 1 breaking the 50 EMA with volume. Price then retraced, created a higher low before pushing out into rise level 2. Then we see the sideways consolidation and then rise level 3. Now, whilst we think rise level 3 may be in, there is no rush to enter. Why? Because at this point, there is no clear reversal pattern. But Wednesday wasn't just about charting. Jared hosted a macro call with financial astrologer Margot Amella, and this is where TTC shines. Margot blends heliocentric and geocentric cycles with market timing. If it sounds wild, it kind of is, but it worked. She dropped key upcoming dates like July the 14th and August the 12th, and Jared posted a summary in our Astro channel in Discord. It's not just moon magic, it's about understanding global cycles and how they can time pivots in gold, oil and even equities. And this fits in perfectly because TTC actually has its own basic financial astrology course. It covers everything from moon cycles to trading styles by sign. Whether you believe in astrology or not doesn't matter. Like Annii says in the course, astrology isn't something you have to believe in, it just is. And to round out Wednesday, Jared dropped a macro update with FOMC probabilities. Powell's recent testimony pushed the odds of a July cut up to 24%, and the next 2 weeks of data will be key. If the Feds cut rates on July 30th, that could be a major pivot across all markets. Before we roll into Thursday's price action, I want to shine a light on the real MVPs, the TTC community. Every week, it's our members who bring the model to life, sharing charts, calling levels, posting their wins and losses in real time, and showing exactly how the strategy works when you stick to it. We had MACD join the Trade Alert team, and people flipping BTC and ETH with confidence because they knew exactly where we were in the cycle. So let's take a look at some of these P&Ls. I can see International has taken a few trades based on MACD's setup, on Moonding, PopCat, and Pepe. My mother's in here again. What's she in now? She's in a BTC coin margin and a Sol coin margin. Massive congratulations to everyone who locked in these trades and stayed patient this week. That's exactly what this community is all about. Alright, let's get into how Thursday's price action unfolded and where it set us up next. So now that we have established our 3-day trend and we're in rise level 3, we're looking for signs of a reversal. And right here on Thursday, we got a multi-session M formation that hit straight into a liquidity area. But even though we broke the 50 EMA, I didn't really trust it. Why? Because of the open interest rising during that red vector candle that broke the 50 EMA. So until I see a confirmed lower high, I'm cautiously calling downside. And we talked about this in detail on my Thursday US session call. I don't think drop level 1 is done yet because of what I said earlier at the start of the call, where we will see 3 pushes or 3 hits within the level. I would call all of that drop level 1 for the 15-minute time frame, then look for the retrace. So our news event is still incoming. US session is still to open. That might bring us the volatility that brings in a clean drop level 1, and then we can look for the retest after that. If you don't get a bearish retest, then no shorts, right? Because this is what Annii highlighted yesterday and today. Retest of the 50 EMA is the best play because the 50 EMA has clearly been acting as our dynamic support. And I followed that up with a chart update in Discord. My bearish scenario is here. Many reasons to be bearish. Delta at 24 billion, open interest, the count, midweek reversal, and now a multi-session M. But let's go to the chart and see how that played out. What I was waiting for is a push to the 200 EMA, and that retest happened before the push to the 200 EMA. So if I was awake, I would have waited for this push to the 200 EMA, price to come back, give me a lower high, which we did get at the end of the US session, and then look for an entry in anticipation of drop level 2 for the 15-minute time frame. Now, even though today is Friday, we're still firing on all cylinders. Jared started the Asia session with a hangout where he broke down his backtesting results, tracking the midweek reversals, the candlestick patterns that form at entry, and how often they align with news events. But we're not done. We've got a call at the end of Asia to prep for the UK session, and another at the end of UK to get ready for the US session. Every session is covered. Our members get guidance and analysis all week long. And to round the week out, we have Coach Kat hosting a session where she goes into the emotional side of trading, and her topic today being leveling up, bigger account, deeper fear. From there, we chill into the weekend, watching for a typical weekend trap, and if we get something that's different, then we sit out until it becomes clear. And if anything unusual does happen, Annii usually jumps into Discord with a real-time update. This is what makes TTC different. We don't just teach the model, we live it together. So if you're tired of trying to piece it all together on your own, this is your sign. Inside TTC, you get access to the strategy, the indicators, the live sessions, the Discord, the full community. You get to learn how to trade with structure and purpose, and you don't have to do it alone. The link to join us is below. So what's next? Price might extend a little higher, or it may start to roll over. But we're not here to guess. We're watching structure, levels, and behavior around that M formation. And here's the truth. By the time you see it play out on YouTube or see someone post about it on X, it's already old news. If you want to know what we're thinking as it's unfolding, not days later, you need to be inside TTC. That's where we're breaking down the market live and in the moment, planning trades together and looking for setups before they become obvious. So if you want to be ahead of the move, not behind it, consider joining us by using the link below.